Welcome to TradeTheMVI.com. This is John. This report is for the 5th of April, and well, it was quite a day the other day as we opened up and started to make new lows, but again, we had a simple rule. Below the 1650, we were biased short, above biased long, and it was just that simple. While we had rising red and everything, we just didn't have a reset of the steel. We still don't have that. It's possible it's going to pop above the 13.5, but it just indicates there's going to be weakness in that overall trend. All we've done is pretty much come back to where we were at last week, right at the 38% right now. Seems to be a positive move going in there. This talk about tariffs, blah, 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 blah. There was much to do about nothing for the most part. The reality is we're just shaking out what was having taken place from back over here in February. And we've pretty much revisited that. Didn't have to actually touch the lows. The bulk of the move was right in this body area right here, and that's kind of where we've seen the primary main action, these quick moves that are taking place after hours and stuff. It's going to happen. That's just part of running stops, and it's a normal feature of the market, and why you see these what they call wicks or long tails on candles. And you still can get around the fact that the growth is still taking place, and jobs are still phenomenal numbers, and euros remaining excessively high. Those are all boding well for both the S&P as well as the NASDAQ. Fine, you've had some political things going on with the whole Facebook, the attacks on Amazon, and since they are primary leaders, it certainly does happen to have an effect, and I don't think that we're done with the whole technology issue, Facebook, Google, all of them, as far as the privacy. Will that impact their earnings and things like that? That remains to be seen. This whole advertiser shakeout stuff, that's getting into the muck of things. Not interested in that. We're looking at the broader move, and the reality is, as long as we have rising shakeout and we're continuing to see positive readings here, at least you got green over cyan with the DOC and that, those are all on the bullish side. So as long as the key thresholds are met, we're okay with it. Like I said, again, the euro at this elevated level has definitely supported it. I think you would definitely be a little bit more concerned about where the market is valuation-wise if you were to see a euro that was dropping into that 116 or below, because at that particular point, then it's going to have a hit on earnings situation. And this is what you would expect, fear and the flight to safety faded away quickly as the market started to rally. And again, we talked about this too. This was the beginning of what we expected for fund money to start coming in. And it was an interesting trigger point, because all of a sudden, as we saw the turnaround happen and the real quick spike in prices, it was a free ride for them to see beautiful discount. And it took advantage of that discount. We'll see it on the 5K chart. The money just kept flowing in. And it just kept going and going. USO, again, oil rebounding sharply on the news that, yes, there's going to be greater draw demands, and that is going to put supply constraints on there, and that's going to keep things elevated. But again, this is our inflation cue for the second half of the year coming into June and the summer months, where you already expect somewhat of an elevated price, but it's only going to add to it. Gold's still going to be heading towards its peaks, even though it's struggled here at this plateau level. It's been sort of stuck in a range. And I think it's just waiting for clear guidance that inflation has really taken hold. Because, again, without the labor component, just because prices move higher does not mean you're going to have necessarily significant inflation. You need to see the wages rising for that to take place. And with the number of jobs being created, and you're starting to put a little bit of a squeeze on labor, I think that you'll begin to see some things. Bitcoin, the trauma continues, and again, this is from that whole broader big time view that we have. Actually, we can look at it. We have the giant chart. If we can go to the daily almost at this particular point, but the signals for this as a broad short that has never really been able to overcome any of its Fibonacci levels coming back up continues to suffer. I know that this is where the bubble idea and this is where the fear of the market comes into, because people see 2650 or almost 2660 on your ES and you're thinking, oh my goodness, that's an extreme valuation like Bitcoin. It's not the same. There are underlying values with at least some of the market things. Here you're talking about a currency that has limited liquidity as far as being able to use in general currency. And this is the problem that the Chinese have. I think Bitcoin is a perfect example of where the Chinese are wanting to move their currency into the replacement of the petrodollar, and that you have to have quite a bit of supply of your currency available for people to utilize on a regular basis in order to really make it a substantial, worthwhile thing to trade. And the Chinese lack that because nobody really wants their currency per se. And the same with Bitcoin is where it may be a great alternative with the blockchain, and that's a technology thing, not as much as a currency thing. And so now it's 65, everyone keeps thinking, what's a great deal? It was a great deal at 15,000, 12, 10, 9, 8, 7. Now here we're at 65. Does it mean it can't pop? No, as a trading vehicle, there's still, the signals are excellent, so you can't complain about that. So here is and this isn't even shrinking enough. I have to even shrink more to get the pre-market where we were talking about. So we were right back in here. I was shorting the fading shakeout readings, and boom, came to a bottom. We ended up with this kind of flat zone for a while here where it was just trading in the muck of nothingness. And literally we had no real activity because the spikes were just insignificant. And then, with the short bias, this is an interesting one because some people say to me, well, does that mean you avoid longs? No, it just means I wait for really good clarity signals. So I'm not going to be looking at the MBIs and GAMs that are below the 23%. I want to see it close above the 23%. And then when I do, I'm going to be following with my yellow ABMs on a lot of this because when we get to these points, you've really got to have a tight trail because I'm looking to shift to a short as long as I'm below this little magenta line right here. And then we ended up with, and I've got the MBI on here, so let me just increase this so we can see it. We'll slide over here at the beginning of the day. There we go. And you can begin to see that some of these were pretty decent rallies that started to take place as we were maintaining above the 23% at this particular point. The rest of this, while there were a couple of pops, it was just sort of chop in between. And we had some weakness signals here from where we're getting the rising gold that we had talked about, and then it broke back down. It didn't come back down to the full low, so in that case I would consider that was one of the first failures that we saw on that. But didn't take long before we were right at the 50% on this. This was really a continuation move of it all the way. And once it got back to the 50% point right here, we continued to break up to the highs as we would be expecting on the rising gold, in this particular case above the 50%, even though the 50% sort of was falling. And when you have the falling Fibonacci, you're being pulled up to the top, or at least in this case to the 50%, which is what we're looking for in this case. And then when it continued to drop again, looking for the highs, and then it reached it right about here, and we were still looking at pretty decent shakeout. And every time we had a little bit of a dip, though, we got to return right back on the shakeout. And so it's a matter of looking to go short on that breakdown in the shakeout. Didn't last very long, and resulted in a couple of just modest break-even situations, but then you had to convert to the positive side of it. This was the most decent short that led into almost a return to the 50% right here, which is kind of what you're looking for in a reset of the shakeout. Barely went negative, and then it turned around right after this MBI, and you had the GAM and that reading above the 50% line, and then that started shakeout, and that pretty much was just a matter of the trailing stops going from there. A couple of times I was too tight, but just re-entered on the upticks in the shakeout indicator as it was going, even though some of them were getting towards the highs. It's always a little trepidation doing that, but we had the rising gold, so I kept expecting that we were going to be staying at the peaks, and if not, or making higher ones. Who knew that it was going to be, once we broke that 2616 was biased more to the long side at that particular point, so I wasn't looking for any little dip to short. Not to mention we had magenta well over plus 15 all the way through until, well, literally the end of the day, right before the close, and even that retrace basically was just to the ABM green, and then we turned around from there. So pretty strong action, not to mention we had cyan under red, well, virtually all the way until just before that close there, right when we got a DOC spread. So that was really about the only short that was available at any given time. So really good action. And again, you know, above the 2616, where buys to the long side, that's going to flip to the 38%, and since it's covered with where price is right now, we might as well take a look at it. It's at 2667.50, so that becomes the next threshold. Once we're above that level, then it's just trading against that. And then, of course, you know, for longs, anyone looking broader daily that has a 2616.50 point, you then can get a better than break-even setup from that trade, and that becomes just an effective way to handle this kind of delicate situation. We still have rising red, and breaking into a new zone was key. We're going to be looking for that to continue to rise, as well as green, and it would be actually better to see the steel either break above the 13.5 or ideally make a nosedive, go straight underneath there while you're getting the strength of your midterm, long-term buyers to keep the market supported. I'm also noticing daily, we got to keep an eye on that, -9, we could be getting towards an overbought in this little brief push. That's definitely something I always like to watch. If we get a red algo situation, it would be just, you know, the potential of, you know, a strong spike move. So we'll keep an eye on it. That's what we're here for. As always, though, keep posting information on Skype chat. I've been sending out the functions related to each of the different indicators in their lines. We'll also be sending out MBI GAN, continuing to work on all of those. That way, complete flexibility in members being able to play with some self-created strategies and or adjustments with them, and just improve our overall collective knowledge to find the best setups. That's because we're always looking for the best setups. As always, trade well. We'll talk again later.